Reading the tape is a vital trading skill that the best active professional traders possess. The skill is rarely taught. It's certainly rarely taught online like in a video like this. This lack of skill, the inability to read the tape, is often the very reason why independent traders fail or underperform. Well, in this rare video, we give you an example of how reading the tape was used to make a quality trade. If you want to grow your account with better trading, then this video is going to help. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the trading videos that we're producing for you in the trading community. Hey, in this video, you're going to see how reading the tape was used to make a winning trade. You're also going to learn how to use multiple variables together to make a winning trade. The key information that you can glean, you can learn from reading the tape. Who can benefit from reading the tape? You're going to be surprised. How to add to a winning position by using the skill of reading the tape. How to be thinking through a trade by observing what you should be seeing on the tape like a professional trader. For those who want to improve their trading so you can grow that very important trading account of yours, we hope this video helps. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. So you're going to learn more in a couple of hours from this trading workshop than from years of online education. I want to actually use this GME trade example to illustrate the power of reading the tape. One of the things that newer guys and developing guys do when we talk about reading the tape, this has historically been the issue at this firm, is that when we make videos where we show the power of reading the tape, people just assume all I need to do is read the tape to make trade decisions. That's true for certain type of trading. So momentum trading, that's true for. There are certain scalps that you can take that is true for as well. But almost all the other trades, we're going to put other variables together to make a good trade decision. And so with GME is no exception. We're going to put other variables together. However, there's a tremendous amount of information that we can use from reading the tape to help us make a really good trade decision. And I want to walk through that, and then I want, for you guys in the room who are a little bit more advanced, I want to point out a signal from the tape that can be very, very helpful to you, that if you see it again, should set off alarm bells that a big move is about to come. Okay? And I'll point out specifically what we're talking about. Before we do that, though, let's bring up a chart. Let's bring up a daily chart of GME and take a look as to where we've come from. So GME has sold off a ton. If we go to even a longer term chart, this is a 3-year chart. It's done nothing but go down, and there's a very good fundamental reason for that, which is they used to sell games in stores, and you can buy games online. And so their core business, for which they used to make most of their money, has subsided. Okay? And I think there are a lot of people that wonder whether or not there is a business here going forward. But there are some people that think, hey, there's still a little value here, and we've sold off a bunch. You got those two camps. You've got, hey, we sold off a bunch from 34. They still got some legacy clients. There's still value in this company, versus one of these days it's going to go out of business. I don't know who's right. Doesn't matter. So you're looking at the daily chart, sold off a ton in a downtrend. Even recently it sold off from 12. And we want to factor that in to our decision. So I don't really want to get long this unless I see something pretty clear that wants to get me long. If we take a look at, I think we were talking about this. Were you the one covering this, or were you the one covering this before the open? We were talking about GME as a good idea. I think you were talking about it?
Yeah.
So the changing fundamentals, or the fundamentals for this trade idea before the open, was they had earnings. What were they?
They missed, and if I remember correctly, same-store sales were down, and they projected that they're going to continue to decline 5 to 10% in 2019.
Okay. Terrible news catalyst, negative news catalyst. We've got a real news catalyst. It's negative. The stock on an intraday base, so we have that. So when we put together trades, we want to take a look at our long-term charts. This is a stock in a downtrend. We want to take a look to see that there's a news catalyst. We've got a really negative news catalyst. And then we want to start to hone in on how we're doing on our intraday chart and how we're doing with the tape to put together a better trade decision. So let's see, and we gapped up down, right? We gapped up over 10% in the pre-market and on the open in this stock. So we have the additive fact that this is an SSR, right? So you can only short the stock on the offer. That makes the stock go up more when it is actually going to go up, because the shorts are trapped at worse prices than they would if it wasn't SSR. All right, so we have that additive fact. And so what happens, we talk about this a lot, the chart stinks, the news stinks. It'd be very easy to come in and just say, all I'm going to do is short. I'm just going to short, swing this low. That is my thesis. My thesis is the stock's going to go down. As smart as you are to think that, that's bad trading. The best traders having the most success are open-minded. The best traders here, when they talk about when they're trading at their worst, they say over and over and over again. Same thing with guys we coach outside the firm. They say over and over again. These are heavy hitters, great traders. They say over and over and over again. When I am not open-minded, I trade poorly. When I trade my bias, I trade poorly. Okay, when I just trade my thesis, I trade poorly. So we have to have an open mind. As smart as it is for us to say, hey, this is probably going to go lower, that's not good trading. That's not good active trading. And so that's the backstory for this trade. And then we're going to open up and we're going to see a ton of volume being done at 9. And I want to point out from the tape how we make a trade decision on top of everything that we've figured out. So there's been a ton of volume already done at 9 before we're going to watch this tape. We're 9:32 is the first time we're watching this?
Yeah.
Okay, so we've got 2 minutes, and just to sort of cut to the chase, there's been a ton of volume that's been done at 9. You can actually see that on the chart. And so this is the fight. This is the inflection point. This is the place where a lot of volume is being done. Let's watch the tape. All right, so stop. When I see green on the tape, and I see it go quickly, when I see the velocity for how it's being taken, when it's all green and it's very quickly being taken, when the velocity on the offer of what people are paying for it is really fast, what does that mean?
They want it at 9.
Yeah, why are they buying it so fast at the same price? Why are they not trying to buy this at 95 cents? Why are they not trying to buy this on the midpoint? Why are they not trying to buy this on the bid at 98 cents? Why are they so anxious to pay the offer at $9 in this stock? So the velocity of how they're paying the offer is a signal. The amount that they're paying it on the offer is a signal. And whenever I see, and we're going to see this a little bit more, whenever I see velocity on the offer at the same price and a lot of volume on the offer at the same price, I'm thinking to myself, boy, if this guy ever lifts 9, and this holds above 9, I've got a real opportunity here to buy this and trade it up into 950-ish. All right, so let's see what happens. Paying the offer at 9, paying the offer at 9, paying the offer at 9. I'm watching. I want to see how fast that off they're paying it at 9. See how much volume at 3,700, 500, 100, 500, 600. This is not the regular amount that somebody pays. Stop. That's not the way that's not the way the tape looks all the time. They buy a little on the bid, they buy a little on the offer, they buy a little bit in between. Why are they paying so much at 9? Let's play. Again, they pay a ton at 9. They're paying a ton at 9. Bid is really close to the offer at 99 cents. Still a lot of volume being done at 9. Stop. All right, now it finally gets above 9. You want to see it actually hold above 9. All right, this can be a little bit of a flicker. Let's see if it holds above 9. And no. All right, so it gets above 9, and the buyers can't step up to above 9. Stop. So you might actually be thinking to yourself, I wonder if this is actually a short against 9. Perfectly legitimate thought, particularly if you're momentum trading. It wouldn't have been wrong for you to start a short position against 9 when the guy lifted and he comes back to the offer. That wouldn't have been wrong, and you would set your stops at probably 906, and you would then play that for a swing to the low of the day based on what you saw on the tape. But are we above VWAP? Yes. It could be the case that it's just not ready for them to buy it above 9 yet. I want to see the down move here towards 9. If this can't get below 90 cents and this can't get below VWAP, they may have just started to buy it against there. Okay, let's see what happens. Open mind, open mind, open mind. They couldn't hold it above 9. Man, if it ever held above 9, boy, would that be a buy. All right, so it has that down move. And one of the things you gotta be thinking with an open mind here. All right, is it going to get below VWAP? Maybe it's just not ready to get above 9. Doesn't definitely mean it's a short. It could be a short, but you have to have an open mind. One of the patterns could be, hey, they're just going to buy this at 90 cents or into VWAP. They're going to get a ton of people short at bad prices, and then they're just going to plow this thing through 9. All right, so let's see. If this is going to be really weak, it's going to go to 75 cents. If it was so weak down there at 9 and it's going to be the swing to the low, it would go to 875. All it does is pull into VWAP. They buy a ton at 93 cents. So I don't have any confirmation yet that this can go lower, and it's still above VWAP. That's still strong. All right, to me, are they going to buy a lot at 95 cents? All right, stop. So when I see something fail from 9, like it did there, it can't get below VWAP, it can't get below 90 cents, and it goes right back to the price they had the fight from, that's a very bullish sign. That's a bullish sign. If it was going to be weak, it would have went down lower, okay, and the seller would come down lower. If they're going to the same price, it's more likely that the guy's getting ready to lift. Play. All right, they're paying the offer. Look at them pay the offer there. Look at them pay the offer. You do not see that very often. The velocity at which they're paying the offer is unique. Green, same price. Green, same price. Look at them pay the offer there. They're killing the offer there. Guy's still there. He's got a big order. Man, if he ever got up and it held above 9. Look at the speed, the velocity. All right, gets up. All right, now that move is, stop. So that move, the last time it got above 9, is that move different than the last time it got above 9? Yes. Yes, it went to a higher price. The first time it got above 9, Ask yourself, what price did it go to? The first time it got up, this time it got above 9, it got to a higher price. That's a bullish sign. Okay? It didn't really get tested to hold above 9, but it did touch a higher price than the first time it just got above 9. That's telling us it's something different. This is a pretty big up move to 18 cents. Okay, so you want to buy when it gets to a higher price, and now you want to be thinking about buying into pullbacks. And from the long side, you wanted to have started your position when it couldn't get below VWAP. All right, so from the long trade, you're buying at 93 cents, your stop is 89 cents. When it gets to a new price above 9, you're buying more. And in this case, you're trying to buy into a little bit of a pullback. You're trying to buy 11 cents or 6 cents, and you're going to hit that out below VWAP. Okay? If you did buy a little bit, I think this is where a judgment has to come in. There was so much selling at 9, and this stock is down so much, and it is SSR. You're going to have to use your judgment not to be the person who gives this up at 17 cents. It's really got more to go. It's got more to go because it's so beaten down. It's got more to go because of how much they paid the offer. It's got more to go because of the fact that it was SSR. It's got more to go because this is really the first level that's even touched before it got to 9. You don't want to give away your profits here, okay? And you want to be thinking about adding. Let's see what happens. I want to see, so it couldn't even get down to 11 cents. It should go to 11, they should have to buy this at 10 cents at a minimum. You know, if they hold this thing at 15 cents, so it makes a new high, stop. That's another way to buy this, okay? It goes up to 17, 18 cents, pulls back in. I expect it to have to go at least back to 10 cents. It does not get back to there. They buy a little bit at 15 cents. It makes a new high again. You can momentum trade that and buy more and sell this into the up move. Okay, so we're not going to watch the whole tape. Can you bring up the chart of how this ended up doing? So it had a pretty strong up move after it got above that $9. Goes up to $9.50. Logical place to take it off. Has the one little move below there. It does that, and then for those of you who are swing traders, you can buy the pull-in into this VWAP area because of the fact that it was so strong on the tape with so much volume. The breakout had so much volume. The move away from price was so big, and you want to look for a place to buy that in. But I would just say to you, like this is the type of work that you want to be doing. Go find a stock that had a really important inflection point, that had a really big battle on the tape, from which the stock had a very big move, and go back and watch those moments. You need to be able to say to yourself, the velocity at which they're paying this offer at 9 is different. The amount that they're paying this at 9 is more than I expect, okay? The pull-in after it got up to 17, 18 cents is more tepid than I expect. Okay, when you are able to do, and we were saying this in real time on the desk, like, wow, they're paying the offer, wow, they're paying the offer. And you can construct trades by being able to see this. It's not the only thing you have to rely on, but you're going to construct trades because you're going to have your tape reading skills. Does that make sense? But you got to go back and watch these moments. People are like, well, I'm going to be more of a swing trader. I don't actually need to learn how to read the tape. We had Shark in here when he did his last review, and he was setting up a multi-day swing trade. And how did he choose his entry point? He honed in on a 1-minute chart and the tape to start a multi-day trade. Okay? Further, I work with one trader who keeps trying to work on his swing trading, and I keep telling him, you're a really good scalper, stop. You should be scalping. Don't do anything else besides scalp. And when he's gone back to doing that, he's gone back to his consistency and making a lot of money. Not everybody in this room is going to be a swing trader. It's okay to be a consistent, profitable scalper. There's nothing wrong with that. You can make a lot of money. There's a trader that we all know here, Swang, who had made a career before he even got, he's made a lot of money just doing that. And so it's not true that you can't. One of the great intraday traders that I know on the street who makes $6 million plus a year is a scalper. He scalps high beta names with really big size. He doesn't do anything else. He doesn't know about these companies. He just moves around to the hot sectors that are really, really moving. Okay, so look, maybe not a lot of you guys are going to be scalpers, but the idea that you can't make a career doing it is wrong, and the idea that you don't need these skills, even if you're going to be a swing trader, is not correct either based on what we're seeing. All right, but that exercise of, and this has got to be part of your daily routine, make note of where the big inflection points were in the stocks you're trading. Go back, watch the tape, watch the nuance in the tape as to what made it more likely to go up or down. Okay, and get that, imprint that in your brain so that when you're sitting there, you can say to yourself, man, this is different. Man, I should buy this if it gets above this price. Okay? Go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you would like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.